A beautiful, refreshing big drink of Vault. I got that black cherry that I love so much. You can also get cucumber mint and watermelon. Go over to Amazon, get yourself a case, see if it doesn't unlock your brain. No caffeine, no sugar. I know it unlocks my brain. Now let's see if we can unlock you this week talking about gold, and this is your request, so I'm coming at you with the answer. We're gonna compare gold to Bitcoin. We're gonna look at gold's history and put a lot of things together to see if we all can't learn together and maybe take something home. So it all starts with gold. You can get gold like this. You could buy ingots or bars. You could also buy gold jewelry that's solid that you want to store that. Some people do that. Or you could get gold funds. All in all, it's going to tag or link or point or be locked onto the price of an ounce of gold at any given time. We're also going to compare it to Bitcoin. But the first thing we're going to do is talk a little bit about gold. So let's go through the headlines. Let's go take a look at the pricing and the history. Has it been a good investment over time or not? And let's look at alternative asset investing, specifically Bitcoin versus gold. So first of all, some local headlines and some new headlines. When I say local, I'm talking to the United States, but I know we have a global audience. Thank you for all you watching from wherever you're watching from. Bloomberg, a week ago, gold climbs toward record high. Now that's a record high in dollar numbers. But when you look back over time with inflation adjusted, it may not be the all-time high in terms of buying power, but it's a record high in terms of dollar numbers because inflation's coming out, and when inflation uncertainty comes up and wars and other things, gold tends to go up as a storehouse of value and as a more definite protector of your future. Then, investing.com, gold prices in sight of record highs. Finally, Reuters. You know, gold advances as rate cut bets. So guess what? Rate cuts, inflation, uncertainty drives gold. And finally, crisis coming. This is how high gold will go. And you have a lot of people up there. Some of them are naysayers. Some of them are pump and dump specialists trying to get you to buy gold. But some of them are making honest assessments. We're looking at Bloomberg, investing.com, and Reuters. So we're not looking at a bunch of charlatans out there just trying to get you to buy gold. We're looking at real headlines from reputable business news sources. And then people that tend to be reputable making videos. But in the midst of all that, there is, just like anything else in life, there is a lot of BS out there, and you would do well to just deal with mainstream whenever you're buying gold, wherever you're trading in gold funds. So let's go take a look at the 100-year historical price. You go back to 1920, you had a pop here, right there. There's the beginning of World War II, descends, and then up to the 70s, we have an amazing run that happens here, 1980, when Reagan was president, and then it drops down even more amazing, right about to where it was, and comes up here. So a 100-year run, there's been a lot of volatility. And there's America coming off the gold standard, which happened under Richard Nixon in the 70s, early 70s. So you take a look at the 100-year historical price, and you've got this big whopper of a situation where it was 2,400 back in 1980. And if you look at 2,400 back in 1980 and you adjust that now, that is a crazy number. But nonetheless, we're almost to the record high right now in real numbers. So now let's compress and let's look at the more recent time. So down here, you've got the years, and I've inserted the presidents. Clinton, remember, elected in 92. He would leave in 2000. So there's Bush right after 1999. 8 years until 2008, 2009, Obama comes in. Obama is there for 8 years. Trump, 2016, there for 4 years. Biden, 2020, and here we are, 2024, next election. So if we look at the near term 30 years, you can see gold basically stayed below $500 until just before Obama was elected. So about 2/3 of the way through Bush's second term. When Obama was elected shortly thereafter, gold finishes a run that starts right before his election, about a year and a half before. And remember, right here, this lightning bolt, that is the worldwide financial crisis that was triggered by real estate in the United States, among other things, and all those bad loans and CDOs and the insurance on CDOs. You can read all about that in the movie, The Big Short. Read it in the book, The Big Short, and then watch the movie, The Big Short, and you'll see what we're talking about. So there's all that. It continues remember, gold loves uncertainty, or should I say the price of gold loves uncertainty. 08, 09, boom, goes up. Under Trump, there's a moderating effect. And then right here, we have the COVID recession, because there's 2019, COVID, the beginning of 2020, 2020, and you have that recession, and it stayed there to where it is now near its all-time high. You also have asset inflation because the United States printed a boatload of money, and boatload is pronounced several trillion, and that affects the asset value. So now the price of gold goes up. So there's that lightning bolt. So you can see the things that have affected gold. But you see it also took 30 years to go from sub 500 all the way back to 2400. And if we had gone back here, like way over here somewhere, you've got that big spike that happened, at the time of 1980, about the time that Reagan became president. He would be elected at the end of 1980 after we fired Jimmy Carter, who had been serving from 1976 to 1980. So there you go, the historical price per ounce on gold. Now, has that been a good investment? So why don't we compare it to something? And now let's go talk about alternative investments and Bitcoin. So now, first of all, we talk about a thing called hardness. Hardness isn't like how hard is physical gold. Hardness refers to how hard is it to produce something that's used as money. Defined. Hard to produce means it's scarce, mean it's a classic demand curve. Let me explain. If it's hard to make more gold, and it is, you can keep mining gold, but you've seen all the shows on TV, a tremendous amount of effort goes into making like a jar of gold or a box of gold that they show, that they've been digging in the streams and everything, and you see all these videos. That's true. It is very hard to mine gold. It takes a lot of effort to get gold out of it, which means you can't just go make it tomorrow. What about the US dollar? The stroke of a pen and another $1 trillion is digitally printed. We don't really print money like that, but is suddenly on the market, and so the value of the dollar drops. Why? More dollars in circulation, value drops. So hardness, gold was always been right there on the hardness scale, that it's very hard to make more gold. So if two people want the same ounce of gold, somebody's willing to pay $1 more. That is an example of the price going up. Two people say, I want that gold. I want that gold. It's $2,000 an ounce. I'll pay $2,050. I'll pay $2,100. I'll pay $2,150. I'll pay $2,200. You can have it. That is an example of the supply and demand curve. So that ounce of gold goes up because it's scarce. There's only 1 ounce, 1 bar, but two people wanted it. So it's $2,200 versus $2,000. If I'm the only one asking for it, how much is the gold? $2,000. Okay, I'll pay the $2,000. Who's there to make it go up? No one. So that is how the supply and demand curve works in a classical, vacuum of a simple chart. But nonetheless, gold is tied to hardness. So historically, gold was the hardest asset until Bitcoin. Because remember, there's only a limited number of Bitcoin. And Bitcoin is the only asset that is also money with a supply that's not increased by increased demand. Gold mining, if there's enough demand for gold, enough knuckleheads will go out there and try to mine it. You see all the shows on Discovery Channel and stuff. There you have it. But Bitcoin responds to increased demand with the price going up. You say, wait a minute, I've heard there's Bitcoin mining. There is Bitcoin mining, but there is a cap on what the number of Bitcoin will be. Now, other people say that's today, but someday that could change. Well, they don't really understand all the intricacies of Bitcoin because no, it's not. But nonetheless, they say, well, you could, where you can't just magically go out to the river and generate more gold. You have to go through all the process of mining it if there's even gold flake in that river. So, unlike gold, and other commodities, increasing the supply of Bitcoin in response to demand is simply not going to happen. So at least today, from everything that we know now. And by the way, I believe that to be true because that's just one of the tenets of Bitcoin. Now then, alternative asset. Let's go look at Bitcoin versus gold, 14-year history. Because some people say, well, gold's been around for 100 years. You've seen what's happened during wars. Let's go look at the history. Well, we're going to start here, down at the bottom. If you invested $1 in gold, what is that dollar going to be worth? And then this one, if you invested $1 in Bitcoin and where it is today, you're sitting there at ridiculous amounts. And right now, what is, $1 in Bitcoin is now what today? 60s? It's in the 60,000s, 62, 64. And the amount of Bitcoin per ounce of gold keeps dropping. Well, there you have it. See? There's your answer. Then on the horizon of the last 14 years, $1 in Bitcoin has done far better than $1 in gold. So when people talk about alternative assets and they say, hey, you can compare Bitcoin to gold, gold may be there in a wartime, but take a look at Bitcoin. Thanks to the blockchain, limited supply and all that, this is what you get. So, and there's a chart that basically tells you that there have been peaks and valleys, but overall, over time, Bitcoin has done phenomenally well in these 14 years. So for the people that say it hasn't been around that long, well, you've got a little history now, more than a decade. So, the gold case. You're starting to see headlines like this: Bitcoin versus gold, which one's a better investment? This is recent. This is from March 1st. So this is only about 3 years ago compared to what we have today in terms of information. This is not like a 2-year-old article. So here's what the gold supporters will tell you. They'll say gold has a dual nature. It's physical and it's also money. And gold can be mined, but it remains scarce. And Bitcoin has farther to fall in a crash than the 2,000 in gold. So they'll say, well, Bitcoin at 60,000 could drop to 30,000 tomorrow, 50% drop. Over history will tell us that gold's not going to drop from 2,200 to 1,200 in wartime. It's actually probably going to go up because of what it represents. And they say Bitcoin doesn't have a proven history as a safe haven going back, 100 years. Well, that's the gold case, and there's some logic in that. But the return on gold has not been tremendous. It's merely meant a safety storehouse. It's not really a long-term investment asset. It's a safety storehouse with hoping that if there's a cataclysmic event like a major war, that it will pop out and give you an investment return. But until then, it is the reliable source of value in the course of big trouble, also known as the safe haven principle. Is it a safe haven if everything else falls to the ground? That's the gold case. The Bitcoin case, a little bit different. Bitcoin, they say, we are the new gold. We are scarce. Scarcity is built in. It's in our charter. It's there. And look at this. Business Insider from the Market Insider, Bitcoin is replacing gold in investor portfolios. It's a fact. The percentage of gold in portfolios is dropping and percent of Bitcoin is increasing for those people that accept Bitcoin. Other people don't accept it and don't even touch it. But for the people that have both, there's more Bitcoin than gold in portfolios. Those percentages are changing. Finally, they say, listen, we have a decade of history versus gold, including going back, 14 years goes back to 2010. And so we went through COVID. We went through the COVID recession. We had things happen there. The gold guys will say, yeah, but you never faced, the total, complete, abject peril of 08 and 09. They'll say, well, yeah, we kind of did. And they say, well, not today with your maturity. So you're untested in the modern world. That's what the gold guys would say about Bitcoin. You're untested today. If it's 2008, 2009 happens today, let's see how you deal with it now. Well, and they'll say, well, because of the scarcity and the acceptance and what we have today, we believe we do just fine. Well, and then the gold guys point back to, crypto wallets that have been hacked. They point to, controversies that happen. But then you also go look at people like Coinbase that have been quite stable. And I'm not looking at all the other coins. I'm just looking at Bitcoin. So Coinbase has a reliable wallet, things like that. And now there's more reliability for wallets and more acceptance of usage for Bitcoin. I think the mayor of Miami, Francis Suarez, is paid in Bitcoin, which was a first. And he brought a lot of attention down to South Florida with crypto conferences. So really, Bitcoin really feels like it's coming to its own. So its case is getting better, and we're seeing more Bitcoin than gold in portfolios The shift is on for those people that invest in both. So I hope that has given you a look through it. You can buy Bitcoin through a variety of exchanges, some better than others. Do your research. You can also get gold, physical gold. It can be shipped to you. It can be held in a safe by a custodian, so you own that gold bar in that safe. You can buy gold funds that track gold. So there's a variety of ways you can do it. And now there's going to be ETFs based on crypto. So now you can access crypto that way. You don't just have to buy parts of coins or whole coins if you can afford one, that way. So that is our run through gold. You asked for it for a quick comparison. I hope that's helpful as a primer to you, because we just want you to understand and have access to great information that allows you to do something with it and answer questions of life. So thank you so much. So that is it this week. Now, if you liked this case study, perhaps you'll like this one or this one from the Biz Doc archive. And as I like to say, until next time, I'm Tom Ellsworth, the Biz Doc, and I hope I left you better than I found you.